Welcome back. I'm now joined by Ben Bertolini, who is the Managing Director of Prudential Investment Managers, to talk to us about investment. Ben, good morning. Thank you so much for joining us here on GMN.
Good morning, Nina, and welcome, and all the viewers. Good morning to all of you.
Just to start with, perhaps you can talk to us about, what investment really is.
Nina, usually there is, people are talking about savings, they're talking about investments, and these words are being used interchangeably. But if I can just say there is a subtle difference between the two. For example, when you save, you put money away for some future use or for an emergency, while investing is you're investing for a long term, and you invest in different assets, what we refer to different asset classes. For example, you can invest in cash, shares, listed property, government bonds, and so forth. So the benefit of investing is that you capitalize on the power of compounding. What we mean or refer to that you earn interest on interest. For example, if you save, you put your money under the mattress, the amount of money will remain the same.
Talk to us a bit about a unit trust this morning, Ben, and why a unit trust is a good way to invest one's money.
Yeah, I must say that I think it's one of the best vehicles that were invented, which is a unit trust. So a unit trust is the pulling of money, and the unit trust is constituted under what we call a trust deed. So what people do when they invest in a unit trust, they take position or exposure in the fund, number one, and then the fund manager who is managing this unit trust using this money to invest across the different asset classes, as I've mentioned, shares, government bonds, listed property, and so forth. So when they do that, then the assets are being spread or distributed across the different units. So when we're talking about investors in a unit trust fund, we also refer to them as unit holders within the fund, and then these units are priced on a daily basis.
And how does investment work with Prudential?
The investment with Prudential is quite straightforward, Nina. First of all, we've got a great website, which is very investor friendly. So when you go onto the website, you will be guided step by step from start to finish. It also includes some excellent investment tools that you can use. You can use the calculator to calculate amount for retirement, for education. So you've got all these lovely tools, and it's quite easily to be used. Or you can also contact us at office if you want to do it via the office. But these days everybody do have access to the internet, and they can explore our website to get the necessary information.
Now, from what you've mentioned thus far, investing sounds like a really good option to have in life. But I want to talk a bit about perhaps what the risks are should an economy collapse. You've invested your money, it's spread across different portfolios like you've just mentioned. What happens when the economy collapses? What happens to your money?
It's unfortunately life, Nina. Nothing in life is without risk. So they've got the saying, that if you don't want to take risk, then you only exist. So, but at the end of the day, this is why your fund is being managed by expertise who knows. It's their daily job. And they observe what's happening in the Namibian economy, South Africa, or global. And based on that, they manage your money. So I don't think there is a case, where the economy will collapse or economies around the world will collapse to such an extent that you are going to lose all your money. What we've witnessed beginning of this year with the COVID crisis is that from mid-February until end of March, the market dropped something in excess of 30%. But during April, it recovered, and I mean, the funds that we are managing, we are close to the levels where the funds end off as at the end of December 2019.
Now, it's very important, obviously, to plan financially for one's future. And I want you to just talk to us this morning about the importance of saving and also what tools, you can use to plan your financial future.
Yes. So as I've mentioned, if somebody new or not, for example, anybody, I mean, at any age, needs to start to invest. I mean, as the wise man again said, that the best time to plant a tree was like 20 years ago. So the second best time is now. And I mean, if you access our website, you will see the necessary tools that you can use. So, and I think it's critical, at the end of the day that you need to start to invest. If you do not have access, to the internet or website, you can contact one of us, and we can basically take you through the process, what you need to do. But there are certain important factors that you need to take into consideration. First of all is what's the kind of objective? Why do you want to invest? That's the most important one. And then the second one is that for what time period do you want to invest? And then a third one is obviously the risk tolerance of people are different amongst people. So you need to establish what your risk tolerance is before you can do that. And then if you've done all this, then obviously you need to decide, what type of unit trust fund you want to use. For example, at Prudential, we've got a low risk fund, medium or moderate, and high risk unit trust funds.
Fantastic. I was just about to ask, a lot of times when we hear the word investment, we think this is some elite financial sport played by those who really have deep pockets, and the average guy in the street wouldn't necessarily approach a firm like Prudential because we think you have big and very wealthy clients. But is investment really for everybody, and does it really cater to the average guy in the street?
Indeed, Nina. And there are a lot of misconceptions within let's say, the investment space. And as you've mentioned, people think that investing is for the elite, but it's actually not true. You can start to invest. Some of the fund manager companies or investment management companies do have products that start off, let's say, from 250 Namibian dollars. In the case of Prudential, you can start off with 500 Namibian dollars. So the misconception also is this huge, or the difference between what income and what wealth is. Because many people, when they earn a high income, usually they think that they are wealthy, but that is not the case. For example, wealth is being built slowly over many years, over generations.
Yeah. Well, on that note, any final remarks you'd like to leave us with this morning, Ben?
Yes, I do have some secrets that I would share with the viewers, which I think is important. First of all, I mean, we experienced it difficult times, is that please, when times are good, don't fly higher than the span of your wings, meaning that live within your means. Number one. And then secondly, always try to pay yourself first, and then you pay all the other people that you owe money. And then the third one is, please do not compete with your neighbors. Mind your own business. And at the end of the day, viewers, as I always say, is that the life that we live is the sum total of the choices that we make.
I absolutely agree with that. Thank you so much, Ben. Thank you for your time.
Good.
That was Mr. Ben Bertolini, who is the MD of Prudential Investment Managers, speaking to us this morning about investments. We'll be right back after the short break.